Hey everyone, welcome to the weekly review. Quite the week we had. It worked out pretty well. Big squeeze in IWM, everything went up, but there is such a thing as too much too fast, and this looks kind of overextended, and we are very close to a shorting point if it hasn't already happened on Friday. So this was the plan for this week. I thought we would only get up to the Q4 open, but we gapped through it and just kept going and going and going. We're nearly at the Q4 high, and this was the target for the whole rally. Maybe not the entire year, but until December, this was the target. And like I said, I think we're overextended. We might go even higher and take out the high here, the Q4 high, and do an engulfing, not actually engulfing, but make a new high and then reverse down. I'll take this out for now. We went basically through everything, all the moving averages. We even closed above the 50 on Friday, back above the 200, back above the 220, back above the 50. Only the 100 MA is still above. But we will come down. The most likely outcome is a pullback and bounce to the 20 MA, which is confluent with the Q4 open. Might be a bit of a push even as low as the 200, which is the Q4 mid, but this area here should provide support, so between 423 and 426. That's the area where I'm looking for support. And there are quite a few reasons why I think we may get a pullback, aside from how overextended we are. I'll talk about them as we get through it. So for now, the main scenario for the week is a pullback. But it's more or less a bullish pullback, not a bearish one. And the only unknown is whether we go higher or not. So one would be we go higher and then we drop. I'll put it right in the middle because I don't know exactly where we will stop. It can be at any point here. Maybe we fill this gap completely, maybe we don't, maybe we stop at the gap start, maybe we go to the for the gap fill, and then we should go back to the highs, maybe go even a bit higher. Um, this can happen this week alone. Like we don't need to go into further out. It's moving way too fast. I keep saying it every time. These moves are way faster than I ever imagined, and it's strange to me. So this is the main scenario. We this first part here where we go up could not happen, so we could just go down, and then we go back up. There are reasons to believe we will go down because we have OPEX on the 17th and government shutdown potential. Given who the Republicans elected, I don't think this time they will reach an agreement with the Democrats, and most likely we will be getting a shutdown as of the 17th. So this week here should be a fear-driven week, in which we mostly stay flat or slightly down. I don't think we get a big drop due to the shutdown, but we should not be going up. So basically the beginning of the month until next Friday is the bullish period. Then we should have a quiet period in which we go sideways, slightly down, maybe slightly up, but unlikely, maybe more likely slightly down between the 13th and the 24th, and then a bullish close for the month, and going into December. That's kind of how things should play out moving forward. And let's look at breadth, which shot up as well like crazy. And we are almost at the red zone in which things are to be shorted again. Another push up on Monday. It's an 100% short. McClellan oscillator. It went really, really, really high. Again, this is the level at which rallies usually stop. And if we get this pullback scenario, which I drew here, what we should be seeing is a pullback in McClellan oscillator and then a lower high. And that will be divergent and predicting the potential pullback we will get during the week of OPEX with the shutdown and OPEX coming to us. So that's kind of the reasoning. Did I want to look at anything else here? No, I think that's it. Okay, and Qs also at resistance here. Maybe something like this. Could go a bit higher as well and then get rejected. IWM, we have a combo resistance. So we had this trend line here. We have this one here. We have this one here. So 178 should put a stop to any rally. There is no way we break through this that easily. What are the moving averages? We stopped at the 50. It's also Bollinger 2. So I don't think there is a way that IWM rally continues beyond 178. And 178 should be a touch and reject, not something that we close above. Something like the next candle on Monday should be, if we continue going up, should be something like this, and we close below the 50, right below the 50. This is where we should close. So it will be a candle with a huge red body or a wick. This DIA almost there as well. New York Stock Exchange almost there as well, and mega caps getting ahead of themselves as well. Tesla is fine, I guess. Apple hitting resistance as well. Maybe I don't think it breaks out yet. Earnings weren't that good. Nvidia somewhat similar, uh, like this, and we might see a bit more consolidation before this crazy move up. So maybe do this again and then break out, gather more momentum. So this is quite reasonable to expect before the bigger breakout that takes us back to 500 or even higher. Google, this looks like a bear flag to me, and it is turning 129 into resistance, 140 into resistance. There's Google is still being sold in the dark pool. Amazon almost getting to the highs. I'll show the positioning indicator as well, and I'll show you guys. Microsoft almost at the highs as well, and backtesting the trend line that it broke. And this is also like a rising wedge. Microsoft is not looking good from my point of view. Actually, let's do it like this. Oops. Something like this. We haven't hit the top yet, and like this. Actually, the other one was good. Meta getting you the highs. Netflix it broke above, but also on a very visible rising wedge. This is my favorite kind of setup. This almost always brings a big drop with it when it realizes. And some is okay, but I think it really wants to go to 100. But it should bounce from 100. Like I don't think it breaks down yet unless we get huge bad economic news. But eh, I think it wants to go lower. Maybe it won't get to 100, but like 103. I think it 100% does. Um, at least it takes out this low. So we have this low here. I think in the in the least worst case scenario, it tries to go another cut this low and then has strong bounce from it. But I think it will take out the low for sure. Maybe it doesn't go to 101 or 100, but I think it goes below this low for sure, and then it reverses. Now, some other reasons why I think we 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 go back down next week. So position indicator, I'll take it one at a time. This is pi. Then we have Qs. We have IWDIA. IWM didn't work. IWM with a huge spike. Apple, which is okay. Tesla is okay. Microsoft. Microsoft is nearly at 100. And one of the reasons why I think it's is going to be a short very soon in the future. It's 352. If it pushes above 355, I think it's already a short. 360 is a dream short. I don't think it can go above that much. And just seeing this, a retest of this high is a short. Then we have Google, Amazon. Amazon, it's at 91, almost at 100 as well. Let's look at Amazon. Almost retesting this high as well. So 145-ish is probably the max you can see. At 145, Amazon is a short. We can see RSI curling as well, so I think there's a good chance it doesn't even get to that. The level here is this most likely, and this here is a deviation. So actually target is 140, not 145. If we get to 140, it's probably a good short. Also has sort of a rising wedge, or not sort of, it actually has one. This, I love these broad rising wedges. Let me show you one on Meta from before it broke down. Where was it? I don't remember exactly. Remember and don't see it. But I remember it had a very nice one at some point. Anyway, back to this. So Amazon, SOM. One of the reasons I said SOM is going lower is I think it will go for zero. Like we haven't had zero in a while, and I think before it actually goes higher and goes for a bit of a rally, we will make a new low in the positioning indicator, and that's why I think it's going lower, or one of the reasons. The chart doesn't look that bullish. It's, I mean, it's okay, but it's not quite ready. This is the vibe that it gives me. Netflix, Netflix almost as at 100, it's at 89, so 90 basically, 89.8. And let's look at Netflix. This very pretty rising wedge that often breaks down spectacularly. Nvidia, Nvidia still fine, but like I said, I want to see more consolidation there. I think it would make the breakout more sustainable. And Meta is at 86. Did we look at Meta? Still around here. Visible bearish divergence, like this is almost equal weight and equal level, and this is way lower. So yeah, I don't, and the backtest of the trend line, I don't see it doing that well. But I stand by this chopped range in which it goes to 278 again. Okay, and the other thing I wanted to show was the put to call OI. So this is Qs. In general, uh, put to call OI goes up while we go up, and it goes down while we go down. This is because while we go up, people hedge. They also get in bearish positions, but that's not the main reason. The main reason is hedging, because if you buy, let's say, if you buy QQQ here, and you do it with shares, you want to have a hedge position. So there more puts are being bought while we go up, mostly as a hedge, and while we go down, uh, the hedges are collected and they are closed, but if you don't reopen them lower. And there is a signal in which put to call OI doesn't, the price goes up and put to call OI doesn't go up. And I'll show a couple of examples. And this is exactly what we had on Friday, and why I think we potentially will get a pretty largish correction, because at this point 3% is pretty large. Like if we were to go, let's see how big this is for, let's say we go to 448 here, this would be like 3%. This is decent size. On IWM, let's say we go to this gap here to 167 and we go to 178. This would be like 6%. This is a big correction, even though we we recently went up a lot. So what I want to show is that put to call OI does not support this rally. We didn't get a spike in put, meaning people didn't really go long. This was just a squeeze, and they didn't put on hedges. If they didn't put on hedges, it means they're short-term focused, and they will take profits quickly. If they take profits quickly, the price will reverse down. So this is a signal that tells us that it the market this has been only a squeeze, not people going long. And when things like this happen, we usually get a correction. Let me see. For example, here, like we had this spike here, which was okay. Then we went back down, and then while we rallied, put to call OI didn't go up, and as a result, we had a drop as well. Like, I mean, the lows weren't in. We got to retest the lows. And this is kind of what I expect will happen in the next couple of weeks as well. And the same is true for IWM on put to call OI. On IWM, it actually went down as we went up. And it has happened as well. Like for example, here we had a rally in which put to call OI went down, and then we had a very sharp drop that followed it. On the other hand, this what we dropped and this went up is accumulation. Like we see here, we go sideways at the lows, and then we see put to call OI going up. This is accumulation, and we had a decentish rally coming up. It wasn't enough, but like if we would have seen this happening, this is a bullish sign as well. Let's see if there any other thing. Like here, it didn't go up as well, and price went up, and then we got another move down. And now, like I said on Friday, we saw it go down even as we rallied. Like this whole rally, we saw put to call OI go down, not up. This is not a bullish sign in my opinion, and it speaks at a larger correction coming down. This is still a bullish setup, meaning we will make a higher low, and longer term this is bullish. But because of the ferocity of the squeeze, if we get a drop, that drop will be significant. Like even if we do it as of Friday, based on the Friday high, it will be like a 4.7 correction. This is large in size. Same happened for Dia. We rallied, but this one didn't go up at all or went slightly down. I can show you it on the other mega caps as well. SPY didn't have this. On SPY it actually went up. But 3 out of 4 say no. And let's look at Apple. Apple is positively correlated. Tesla is fine. Microsoft concerning because price went up a lot and put to call I did not. So another reason to look for a short on Microsoft. Google price went up and this didn't. A reason to be bearish on Google. Amazon pretty well correlated and it went up, but probably stalling. Tom, nothing really out of the ordinary. Netflix is okay, so Nvidia. Nvidia didn't go up significantly. And Meta, nothing really here to take notice of. Okay, so yeah, that's kind of it for this week. Um, Next week is for looking for short opportunities. Like this is the reverse. Don't short the whole. Don't buy the 8% rally in IWM in a week. How much did we go up actually from the low? 8% for Qs. 7%. So don't fucking chase this. This is just stupid. So just look to short this, and especially if it goes higher. If it doesn't and it start dropping on Monday and you didn't get the chance to short, maybe don't chase either. Because, like I said, the expectation is that we will make a lower high and then we go back up to this in the following week or even later this week. Meaning the window for a drop is until Wednesday, Thursday, and the window for another the rally back up is until like Tuesday or Wednesday, probably Tuesday. The expiration is on the 15th. Oh, one last thing to add here is one of the reasons why we went up is because of the VIX crush, but VIX, so implied, no, theoretical volatility and realized volatility are now almost equal. And that's because the rally was so crazy and fast that it actually made IV spike. This doesn't happen often, only in the case of huge rallies, very quick rallies like GME explosion. You get an IV spike, a huge IV spike because people keep buying. So this rally on basically everything made IV spike. And what is going to happen next week if we don't keep going up at the same rate, and we won't, is IV will be slowly coming down. And this will make both puts and calls lose value. But it's more damaging for calls in this scenario because the market can use the momentum from the call decay to push the price down. And I think this is one of the other reasons why it will go down. So for the rally to continue, it needs IV to come back down again, and to be a difference between VIX and realized volatility, like theoretical volatility, implied volatility, and realized volatility. Theoretical volatility has to be higher than realized volatility to be a backwind for price. So we need to go down, IV to come down, and then when theoretical volatility will be high again and realized volatility will be low, price can go up again based on the VIX crush. Something like this. I don't know if I explained it very well. But right now, we had an IV spike because we went up very fast. And expectation for next week is that IV will pull back and that will take the wind out of this rally. And even potentially put the wind in a drop. Yeah. So that's it for this week. Have a good one. Bye bye.